Hi everybody, Russell here. Let's get right into the weekly essay here. So this additional video I've put in, very useful this one this week here because I'm going to show you some incredibly powerful techniques to use within VectorVest. All right, so first thing first, we want to check in on upcoming earnings reports. Now the consensus out there is pretty gloomy at the moment. The consensus of analysts out there are saying things are not going to be good. The earnings reports are going to come out and disappoint. And not many analysts are tipping good earnings season. Get different degrees of it, some being very gloomy and others being a bit more optimistic, but the general consensus is down. We as investors need to be aware of that because if we're holding on to certain companies where the earnings reports come out and they're not particularly great, there is the possibility, there's a strong possibility, of course, that share prices will be sold down, and we've seen it time and time again. Earnings report comes out, it misses the consensus, and down it gets sold heavily. You don't want to get caught out. Conversely, if you're holding on to a share and the earnings report comes out and it's much better than the consensus, then watch that share rocket. Right, the share rockets up in price. So there is a danger that you sell out going, well, I'll sit the sidelines because I'm concerned it's not going to be a good report, and it's a really good report. You could be buying back in at a much higher price. But having said that, the flip side is the earnings report comes out and it's a shocker. You could be caught out. All right, you've got your stop losses in play there, but you could be selling down for quite a bit of a loss. So that's the trade-off. We need to be aware. So we need to investigate further what are the warning signs for certain companies that we're holding on to make sure that if we're holding on during earnings season, when those earnings reports come out, that we're not going to be left with too many surprises. And VectorVest makes this really easy for us. So what we're going to do here is we're going to click on Viewers, and on the left here on the Viewers tab here, click on Event Viewer. So you can see that as of time recording, it's Wednesday, and Wednesday my time here, and you can see these are the upcoming earnings reports due. Okay, so you can come over here and you can look and you can say, all right, well, as of Tuesday, 20th of July, VectorVest noted there, FLN. So here we go. I've hopped into the ASX. I'll bring up FLN within the Australian Stock Exchange, and you can see here, heavily sold down, 5.6% fall in the share price. There we are. The results, the presentation on the results, no prizes for guessing there that the results didn't stack up to what the analyst consensus forecast was. Okay, so you don't want that to happen to you. What are the warning signs? Okay, so what I'm going to do here is I'm going to concentrate on a big one here, that being Rio. All right, so everyone's looking out for Rio. What's Rio's results likely to be? So I'll show you the analysis on Rio. I mentioned 5 key indicators you can look to give you a good idea as to what is likely to be. Now, as of time recording, I'm looking here, refreshing my ASX browser. No report yet. Looks like it'll be probably at the close of business today. I haven't seen a earnings announcement just yet for Rio. Okay, but let's drill in and have a look at some key indicators here on Rio. So let's click on Rio. Here we go. Rio will fire up. I'm now going to click on Graph Selected. See how quick and easy that is to do. I'll bring across my graph here. Here we go. Maximize it up here. On the graph layout here, I've just got, say, the VectorVest simple layout. I'm going to scroll down here. I'm going to remove the stop, and I'll take off the technicals for now. And I just want to concentrate on the earnings. All right, so we're looking for the report to come out on earnings. And what's VectorVest telling us? Well, this is a 12-month leading forecast earnings. We're seeing it is declining. And you'll see too that the price is fairly volatile. The market's undecided at the moment. You know, we're seeing a lot of volatility like this, as noted by the Australian Financial Review. One of the analysts there, I read a report, very interesting. The analyst noted there that, you know, warning signs or signs to check for if, you know, earnings is not going to be consensus. And one of the warning signs there is a volatile share price. Means that there's a lot of uncertainty. If you're seeing a pretty smooth upward trending share price, then it's telling you that the consensus out there is feeling that the earnings report's going to be good. Well, one can argue certainly it's been moving up, but that's a lot to do with iron ore prices, no doubt. But a fair bit of volatility here, which tells me there's a little bit of uncertainty. I'm seeing it in the earnings. So there it is. VectorVest puts on the earnings straight away for us. So there we are. We're seeing the first warning there on earnings. The second warning here, I'm seeing a bit of volatility on price. Let's do this. Let's put on the earnings growth rate. So add parameter, capital appreciation, GRT, earnings growth rate. So GRT, just reading here the exact definition there at VectorVest. GRT reflects a company's 1 to 3 year forecasted earnings growth rate in percent per year. So the forecasted earnings growth rate, it's still very strong at 15%. That's very, very good. But it has come off a bit. All right. So if you see over here, for example, if I put the date line here, you can see it's come off from 21. It's just lagging a bit, so you can see it taking place over here. Now remember, if you need to get the definition for any of our given stocks, so if I just minimize this here, right click, and then on any given stock, say in stock viewer, and you can view the full stock analysis report, and from here you'll get all the key definitions. Okay, so just a quick reminder there, if you ever get stuck on any of the definitions. Let's go and load the graph back up. Okay, so we've got 3 so far. We've got the price pattern showing a bit of volatility there. We've got the earnings declining. We've got earnings growth rate sliding a little bit here. The next one I want to look at here, that I like to look at here, is the net profit margin. So add parameter, VectorVest fields, and then you need to identify NPM, net profit margin. So for every $1 of sales that Rio makes currently, it is collecting about 5.3 odd cents profit. So 5.3 odd percent net profit margin currently. Okay, we can see it's down a bit. If you come back, say August last year, you can see the net profit margin was 16 odd percent. You can see since then it's been under a little bit of pressure. You can see the earnings have also started to slide. Now, net profit margin on its own is not going to necessarily tell you the full picture as to why earnings are declining. It also comes down to sales. So that's the 5th one I want to also look at. I like to look at 2. So here under sales, market capitalization, let's click on sales in millions. So you can see here 62,113 million. So you can see sales have been fairly flat, while net profit margin has been declining slightly. It picked up a little bit here, all right, but net profit margin's been declining. So you put the 2 together here, you're seeing, sales sort of holding steady, but net profit margin just sliding slightly. That's flowing through into those earnings there, right? So these are the key things I like to look at. So looking at this for Rio, I'd say that it would not surprise me if the earnings report comes out and it misses the consensus. All right, so it misses the consensus. Now, as we note there in the weekly essay, as we note there, you've got some options, right? You can choose to sit in cash and wait for the earnings report to come out. If it's good, you can buy back in. But of course, if it beats consensus forecasts, you watch that share price will rocket up. If the earnings does not beat the consensus forecast with the analysts out there, and it underperforms, then you watch that stock gets sold down heavily. The market's in no mood for underperformance currently. Okay. When looking at the upcoming earnings reports, I like to make sure that my earnings are rocketing away. I like to see that the earnings growth rate profiles are powering up higher, good net profit margin on hand, good sales taking place. That gives me a lot of confidence that the earnings report will surprise to the upside rather than to the downside. Now with Rio here, I'd have to say it's neither sort of here nor there for me. Sure, I am seeing a slight tapering in the earnings, but the earnings growth rate overall is still pretty good. Net profit margin is not bad. This company is a high volume, lower type margin business at the moment. It's still a tremendous amount of sales. I'm not seeing sales falling off a cliff despite coronavirus. I'm seeing net profit margin holding steady since August last year. All right, so I'm not seeing anything here that overly concerns me, but at the same time too, in an ideal world, I would prefer to see those earnings powering up. So this is the worry at the moment. I am seeing the earnings declining, and as such, if I held Rio, and again, please, this is not to be taken as financial advice, but if I held Rio, I would be more inclined to be taking defensive protection type measures. So in other words, I'd buy some put options. So if Rio did come out with an earnings report that was worse than the consensus and the share price fell, my put options would hopefully offset the loss in Rio, or at least I'd tighten up my stop loss. Or if I'm conservative, I'd move to the sideline. I'd wait for the report to come out, and then of course I'd look to buy back in, provided that the report stacked up. All right, so that's what I do each and every day in regards to earnings taking place in earnings season. One last thing I'm going to leave you with, I'm going to show you how you can screen for upcoming earnings taking place in the next 30 days. Let me show you how quick and easy it is using VectorVest. To do so, I'm going to close out here and I'm going to click on Unisearch. All right, now here's one of the such searches in Unisearch. Let's do this. Let's create a new search. So I'll create a new search altogether. All right, over here where it notes parameter, I'm going to go stocks. Where it notes capital appreciation, I'm going to look to click on this one here, earnings date. Earnings date, operator, less than or equal to, and in the value box here, I'm going to put 30 days. Find me stocks where the earnings date is coming up in the next 30 days. Run the search. Look how quick and easy that is. It just brings it right back to your fingertips. You've now got it all at your fingertips, and you can now go, okay, here they are. And instead of showing the top 10, I can click on all. All right, run the search again. Here we go. Here they all are. In the next 30 days, these are the companies where the earnings are coming out. And you'll see here, the default sort is by VST. All right, so I'll just right-click auto fit all columns here, and I'll just maximize this here. So the default is by VST. Okay, so just open this up a bit. There are VST, and you can see as I scroll through the list, here they all are in the next 30 days. So what you can do here, and here's another opportunity, is if you are looking to buy into companies just before the earnings reports with the view that the earnings report's going to surprise to the upside, and therefore the share price is likely to power up higher if you are looking at such a strategy. Well, why not start off right up at the top of the list? Let's look at some of the best stocks money can buy, right, based on the VST on this list. So let's grab the first few here, fire it up, and I can have a look here. All right, look at that. Rising set of earnings. Here's Min Resources. Good. Rising set of earnings growth rate. Wow, 51% on the earnings growth. 22% on net profit margin, and sales are climbing up steadily. Right, you can see that they've lifted up yet another gear. This to me looks like the earnings report's more likely to outperform than Rio, but time will tell. I can't predict. But I can see plenty of warning signs in front of me. Look at Fortescue Metals, rising set of earnings, not the waning sort of earnings that we saw on Rio. Look at the growth rate, 30%. Net profit margin just powers up, keep powering up. Sales kicked up another gear. It's looking pretty positive to me. Let's have a look at this one here. All right, AGG. A little bit of a slide here on the earnings, as you can see here. All right, so the earnings are sliding a bit. So this one here I might give a miss if I was looking to buy in just before earnings report with an anticipation that earnings are going to exceed expectation. Oz Minerals, look at that. Great set of earnings. Growth rate there at 23. Net profit margin powering up. Sales powering up. All right. A powerful strategy to consider, but a word of warning. This is a very aggressive type of strategy. You're looking to buy in just before earnings report season, per the report coming out, with the anticipation that the earnings are going to surprise to the upside, and therefore the share price is going to kick up nicely in price. Be warned, because sometimes, for whatever reason, left field, the earnings report may come out and disappoint. Even though earnings are rock solid, the company comes out with a great set of earnings, but it does not meet consensus forecasts, and therefore you see it getting sold down. You'll see there in the weekly essay we refer you back to the example that we wrote on A2 Milk a couple of months back, where the earnings report was stellar, but it missed the consensus forecast, and as a result it got heavily sold down. So just a word of warning, that is an aggressive strategy, but Having said that, for those of you that are conservative investors, of course, which is most of us, we do need to be aware when earnings are taking place, and we need to be in a position to look for warning signs whereby earnings may disappoint to the downside, such that we're not holding on to stock where a lousy set of earnings are released into the market. Thanks again. I hope you got a lot out of this week's weekly essay. Bye for now.